Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Jordan Sachs, he's the head of healthcare listings at Nasdaq, as well as Josh Collins, he's the head of healthcare advisory services with Nasdaq IR Intelligence. Big day at the market site for healthcare IPOs. Jordan, congratulations on another great day for listings.
Thank you. It's a great day for Nasdaq, but a great day for healthcare in general. And there's a huge team here at Nasdaq, 45 people plus, that are just focused on supporting these newly public companies, as well as the private companies that we're working with that are on the path to hopefully joining Nasdaq. So, this year we've seen over 34 healthcare IPOs in the first half of the year, and over 26 biotechs, raising almost $3 billion in new proceeds. So that's amazing, and the trend is really consistent with last year's activity. Even considering the fact that we had the government shutdown earlier in the year, it makes us cautiously optimistic that this trend is going to continue further.
I mean, it's quite incredible. In the first half of 2019, you have a win rate of 97% in the healthcare space. That's right. That's great for the listings team.
And even better, in biotech, it's 100%.
Well, there you go. Josh, let's turn it over to you. Let's talk about some key themes the advisory desk is watching in the healthcare space.
Yeah. So far in this year, the 1Q has been a really solid start. More of a risk-on trading environment coming after a pretty dismal fourth quarter, and anytime risk-on happens, biotech tends to outperform. And then a lot of M&A pickup, which is really great to see. But as we kind of turn into the second quarter here, there's a little bit more of a headline risk taking place. Some of the conversations around Medicare for all, opioids, and then just overall drug pricing conversation. But with that said, M&A is picking back up now in June, so we're starting to see a lot of reversal here.
All right, and Jordan, let's go back to the IPO conversation. When you talk about pricing and above the range and how the IPO outcomes react, what are some of those stats there?
Yeah, so I like to look at companies and really to determine how well the market is receiving them, to see, well, how are they being priced, so you get an indicative range before they list, and then how the company actually prices, whether they're within the range that the bank set or above the range or below the range. So that gives you a good idea of the investor appetite. So this year we've continued to see over 80% of the IPOs priced within or above the range, which is great. That's a very healthy sign of the market. And also it's a very healthy sign of the correct pricing model, because if they're all being priced outside of the range, you'd think there's a disconnect. So again, looking at the pipeline, looking at the measurements that you're seeing on the performance of the pricing outcomes, we're very optimistic that we're going to continue to see more and more of this trend continue.
And when you look at the pipeline, is it skewed to one subsector or the other? Is it continuing? Biotech is really where you're seeing the flow?
Biotech pharma tends to be the majority of the healthcare sector. We're seeing a lot more interest in med device. It's always on the uptick, but for the most part, gene therapy, oncology is a very big focus, and that's where a lot of the venture money has been pushed into. So we're going to see that lag of investment dollars starting to come back to the marketplace through the cycle of the VC model.
And healthcare FinTech is really interesting too.
Well, that's right, and we also have Change Healthcare today. So that is one of, I think they raised over $800 billion in combined proceeds, which is amazing.
Wow.
So a large deal, and just another indication that the healthcare IT or that healthcare tech sector is continuing to develop.
Are you seeing that as well? Yeah, and interestingly, in med tech, we're seeing a lot of capital really flow into those stocks. It's a time when drug pricing is a big conversation. They're not as exposed to it, so it's almost being used as a safety trade within healthcare, that you want to still be exposed to healthcare, but not be as tied to the drug pricing conversation.
And just to further that, we're talking to over 250 healthcare companies right now that are private in the U.S., and we're having conversations that are either 12 to 24 months out from an IPO, and a lot of those companies are med device companies, med tech, and those conversations continue to expand because I think, as Josh mentioned, when you get into that election cycle next year, that will be one stable anchor that you're going to be able to always take to market and not have to worry about the fluctuations of political impact on volatility.
Right. Well, 2020 and 2021 appear that it's going to be just as busy as this year.
That's right.
All right. Now, Josh, within Nasdaq IR Intelligence, you're constantly advising investor relation professionals out there. What should they be mindful of looking into the back half of 2019?
Yeah, so the landscape for IROs is really changing dramatically with a lot of the regulations that are coming out, especially MiFID II. So it's really more important forever to be able to directly connect with the buy side and the sell side. That's the expectation, is there's going to be a lot more direct contact with them instead of intermediaries. So it's really important more than ever to have tools and resources at your disposal to not only know what's happening in your stock real time, but really having to target investors and also directly book meetings with them. So we actually have Nasdaq Connect IR launching just in a few weeks here, which will make that a much more seamless process and allow you to really measure your results.
All right, but in terms of the healthcare space itself, What
Yep.
are you advising IR professionals?
Yeah, I mean, I think, given we're in this very headline-driven market right now, is really to get out there and really control the narrative for your story as much as possible, and really get in front of the right investors, because there will be a lot of noise, there will be volatility, especially as we head into the election cycle. But investors are looking for, more short-term, interesting stories where there can be a return. So getting out there as much as possible.
All right, now beyond your public offering on the Nasdaq stock market, there is a way for listed companies to continue to gain access through our indexing business.
That's right. So one of the most important things for healthcare, especially biotech, pharma companies, is exposure to the index inclusion opportunity. So when you list on Nasdaq, you then have the opportunity to be eligible for the Nasdaq Biotech Index, which is an amazing gold standard for healthcare. And then when you look at the AUM that attracts to that index and follows it and tracks it, you're looking at over $8 billion of capital. That's passive income that becomes on the top 5 holder for one of these new companies. So again, it's a great way to put in passive investor onto your cap table. And Josh and his team, they spend a lot of time trying to identify where to find those investors. Yeah. And this is one easy low-hanging fruit to get. And I think companies like that stamp of approval of being in the index, so you get that global branding plus the benefits of the passive index investment.
All right, Jordan, Josh, congratulations on a great day, a great 2019. Thanks for joining me. And thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.